What's up, traders? Get my face in here. What's up, traders? It's Kevin SBA, and today we're going to discuss a quick way to make money, which is inverse indexes, learning how to read them and use them to your advantage. If you haven't dealt with them, this is something you definitely want to pay attention to and make sure you understand, because it should work to your advantage in the future. Again, I'm not a licensed trader. This is not financial advice. I'm just a man giving you my opinions, so you take it for what it is. So in Robinhood here, let's see, today is October 16th. It's Saturday. And what we're looking at when I talk about inverse indexes is, in particular, we're looking at UVXY. That arrow wasn't so straight. Okay. And the SPY. Now, as an inverse index, like the word dictates, these two indexes are opposite of each other, meaning that when the SPY goes up, the UVXY will typically go down in proportion to what the SPY is doing. The SPY as an index, and an index is a grouping of stocks. For the SPY in particular, it's to kind of judge the health of the financial market. It's a way to dictate, how the market's doing. As you can see in this month view, it's been just a rocky ass road. You can see it go up, down, what have you. But the key factor I want you to pay attention to in using these to your advantage is that typically when the SPY goes up, the UVXY will go down. So they're in opposition of each other. When one goes up, the other's going down. I'll show you an example here. This is the month view. This is the month view of the SPY. All right, so if we look at it here, let's look at the numbers it did. So it had a peak in September 16th. Watch right there. On September 16th at 11 a.m., it had a peak of 447.15. If you're looking at all these, the peak, that was the first peak. The dip was at 429 on September 20th, 4 days later. Had another peak again at September 23rd of 444, and then a dip down to 427 on October 4th. Looks like that's, probably 12 days later. The next peak was October 7th, which is 3 days later after the last dip. So you're seeing peaks that are 447, 444, and 441. So all three of those prior peaks, they're averaging about, let's say they're averaging about $444. That's the average of those three peaks, just a rough estimate, just so we have a number. If we look at what the S&P is doing right now, the S&P right now is at $445.87. So judging from what we've seen at these other peaks, it's going to go down. It's above the median, which we just said was 444, which means that it's due to go down if we're just using common sense and patterns with that. It is, I think yesterday, to be honest with you, it was like 446. So it's above the average, which would make me believe, in my opinion, my humble opinion, shouldn't say educated, even though I am, but in my humble opinion, it looks like it's about to make that turn. Now let's look at the inverse part of this. If we know it's going to go down, what does that mean for us and how do we use it? Well, so let's go back to September 16th when the the SPY, which is an ETF, was 447. So if we take the same time and date, September 16th, 11 a.m., and we go to the UVXY, let's look at September 16th. Go to the month view, September 16th at 11 a.m. Okay, we see it was at its low. So as the SPY was up, the UVXY was at its low because they're inverse. When one's doing one thing, the other's doing another. If we look at when the UVXY, to further prove my point, if we look at September 20th at 11 a.m., the UVXY hit a peak, $30.18. That's September 20th at 11 a.m. when that happened. So now if we go to the SPY on September 20th at 11 a.m., right there we see exactly at that exact time it hit a dip of 429. So that's the validation of how they work in opposition of each other. Now I will say this, keep this in mind as I make this point, that the UVXY does not always move exactly in opposition to the same degree as the SPY moves. And we can see that here because if we look at, in this month view, we look at the dips and peaks that the SPY had. That's pretty deep with those dips and peaks. If we go to the UVXY, those dips are not as pronounced. It's almost linear after that. So the idea of this is that you're getting an idea when the price is going to rise or fall. You just don't know to what degree. And the other thing I want to make as a point with UVXY is that UVXY is a consistently or constantly depreciating stock or depreciating index, meaning that over time it's always going to go down. So I say that because you do not want to just put your money like you would in normal stocks in the UVXY and just sit on it, because you will lose money in most cases. It's just a depreciating stock. But where you can use it to make money is that you're going to use the SPY to identify the trend of when the SPY is about to change. And you know that and you have a good, strong inclination that UVXY will come up, being that you know the SPY will go down. So if we go back to our example real quick here, as we said, the SPY currently is at 446, not 445, way above the average of 445 that the other three prior peaks in the month have averaged out. So the other thing to note is that when it does hit a peak, it's typically, so we see it hit this peak on September 23rd, but it didn't really come down or start to come down until the 27th. So it held that range for about 3 days, 3 to 4 days. If we look at the other peak, it on October 7th hit its other peak and didn't really start to go down till October 11th. So it seems to hold for a couple days before it goes to a dip. Using that information, we see that we started to reach our current peak on, this today being again October 16th. October 14th, it started to go up. It really peaked around the 15th. So we might be looking at a couple more days. I do tend to see that, on Fridays, it might be a certain range. Then Mondays are when it will do it'll make a change in price, opposite of what it was Friday. A lot of times that'll happen over the weekend when you come back on a Monday. But going back to what we're seeing here, it is again about a 3 to 4 day hold at the price peak that it reaches in the last two peaks that we've seen within the month. So it may take place on Monday, this coming Monday, where the SPY begins to drop and the UVX goes up, or it may be like a Tuesday, Wednesday, or even longer. And I say longer because if we look at the dips started to happen around the 28th, and that dip in various forms lasted, till the October 6th. Even though it had some peaks in there, that was a pretty extended dip. This isn't written in gold, but just for your reference, it tends to be 3 to 4 days that it'll hold the peaks. At least that's what we've seen in the last month. So it might be Tuesday, Wednesday, or even towards the end of next week that we'll see the SPY drop and the UVX go up. So UVXY right now sitting at $18.12. It's reached as low as, I think it was 1750, high 1750s. I think I saw that. But 1761 is what we're looking at in this view. So with all the information I've given you, that's the basis that I use to determine. You want to use these opposing inverses to make your decisions. investing, you don't want it to be wild hairs on the back of your neck where you're just guessing what stock's going to go up based on whatever it is, Reddit forums, information, or just, unicorns and pixies that have given you info in your sleep. You don't want any of that. You want to use informed information. And I can't think of better stats than two inversely related indexes that work in opposition of each other, and they show trends, strong trends that you can use to make a decision of when something's going to go up. So this is the validation showing you the trend, giving you educated information, somewhat educated information of a pattern, and you now want to use that information to predict the next pattern. And if we're using those two prior ones, we can strongly say, not 100%, but we can strongly make the inclination that it's geared to go down and UVXY will go up. And if you're buying UVXY, which it's fairly priced, like I wouldn't buy the SPY based on the fact it's $4.50, $4.45 a share. UVXY is $18. So, you're going in with $1,500, you're going to get about 70 shares. So 70 shares mean every dollar that it goes up, you're going to get $70, on that basis. So that's the information I want to share with you guys. Chime in, let me know how you feel about it. But I wanted to, again, try to post a little more often, build a forum where we can have conversations as retail traders. We're not the big wigs. We're not the big corporations or the hedge funds. This is just a bunch of independents, and we want to be able to chime in and kind of have a community where we can give tips to each other and go from there. So I look forward to hearing your feedback. If this was helpful for you, it should be if you haven't worked in indexes. Even if you don't use it, it's helpful to just know that these exist. Opposing, opposite, inverse indexes that you can use against one another to kind of predict where a stock might go with some reasonable validation from its patterns in the history. So good stuff, I feel. Let me know what you think. Hit that like button. Go ahead and subscribe, because there's a lot more videos like this and others that I'm going to share in the future. And I'm going to, again, as I said, try to post more often. But, looking at your feedback, that's what gets me to post more things more often, because I see you guys are actually watching. All right. Thanks again, you guys. Have a great weekend. Have a great week. And I'll see you in the next video.